Hey everyone, welcome back to another edition of Super Prime UK with your Super Prime valuations specialist, myself, Rob Cohen.
And myself, James Wild.
Another super exciting week in the realms of the real estate, property and lending. Hopefully, we've got some great updates for you, great insight, great intel today. We'll be providing you with everything we've been seeing on the roads, on the street, within the market, hopefully supporting you, the bankers, the lenders, finance, the sales, everyone in the industry. So straight to it, James, what's been happening? What can we share with the audience this week?
Yeah, thanks, Rob. So in terms of the last few weeks, I think we've been talking quite a lot, Rob, on what we've seen, the building sentiment, how busy we've been, out and about valuations, lots of refinance work, development work which we've been undertaking. And I think some of the figures this week are reflective of that. So there's slightly higher rates of stock on the market, 360 new instructions this week, which again, quite positive, Rob, and above average from what we've seen this year. And big news on the sales this week, record sales this week, the highest we've seen this year, Rob, in terms of weekly sales, 178, which again, it's good to see some of the sentiment we've been commentating on in the market, that sort of coming to fruition, and those transactions to be noted down.
Yeah, I think super clear indicators of everything we've been reporting for a number of weeks now. I think starting from the valuation perspective, inundated with valuations in terms of both sales, acquisitions and purchases and refinance market, which is very strong at the moment. Combine the two together, you're seeing a real challenge in the supply chain within that space. I would say most companies now are leading into May already, so about a month is your timeline, and I think that's just a pure reflection of the demand that there is within the valuation space because of the volume of transactions that are taking place and the volume of refinance taking place. It'd be great to hear from all of our banks and all of our lenders of the challenges they're facing with bookings and allocations, and obviously if we can help, we always will do our best.
Yeah, I agree, Rob. Within the private banking and bridging sectors, that need for sort of time-critical valuations is absolutely essential, and obviously we make ourselves available for those cases. And some further statistics on the back of that data. So, Rob, prices are now 21% higher than they were pre-pandemic in early 2020. And also the average price of a house has risen by 33,000 in the last 12 months. And the house price index of Nationwide currently stands at just over £265,000. Again, Rob, in terms of the sentiment we've been commentating on the last month or two, prices have jumped by 1.1% in March alone. It shows just in that run up to Easter and spring how strong the residential market has been. And just on reflection of that, the housing market has retained a surprising amount of momentum given some of the mounting pressures we've had in the last month or so with household budgets and also the steady rise in borrowing costs.
Yeah, I mean, as I've mentioned quite a few times on the show, over my near 30 years now in the industry, the buoyancy and the robustness that we've seen within more specifically the residential space has been, I would say to a degree, in some areas surprising, and at the same time a reflection of the strength of the fundamental economic conditions that we find ourselves in. And so it's an interesting position now with the inflation and interest rate growth. It's an interesting dynamic to see how much further and how much more sustainable and more robust the market is. Where does this position go? And I think that's what we're here to report week in, week out.
Yeah, I think with that, the sort of a positive note is that interest rates were just at such a record low, being 0.1% for so long, that interest rates, even though they've been rising in the last 3-4 months, they're still, if if you take a more long-term view, really are sort of at record lows still. So I think a lot of people in the market aren't so hurt by that. They're still, base rate at 0.75%. That is a sort of a fairly standard level for mortgage lending and borrowing.
Yeah, I'm interested next week to see the monthly super prime numbers and data on the back of a record quarter on the back end of 2021. I'm really interested to see what the March figures look like in super prime. I would expect really strong numbers, and next week we'll be reporting for all of you super prime lenders and listeners and watchers. We will be reporting the monthly figures. That's going to be a really good and key and important indicator of where we're at so far in 22.
Yeah, thanks, Rob. So just in terms of the rising prices across the country, inflation, the cost of living, the main stigma here the last few weeks, Rob, has been obviously the rising fuel costs that affects people in their sort of day-to-day lives, getting to work, getting to any of their social occasions. And there's been a lot of other price increases just across the board, such as the VAT relief on the hospitality and tourism sectors, which is being lifted as of next month. National insurance contributions going up as well. Water bills increasing. Tube and rail fares we saw go up at the start of the year. Some fares as much as sort of 7 or 8%, and sort of a blended average of about 4.5% there on tube and rail fares. And I think it's going to be a tough year for the whole country in terms of everyone's disposable income being dramatically reduced. Do you think this is going to have a cooling effect at all on both the London and the UK housing market, Rob?
I think naturally, and we're aware of the modelling that the banks are using for affordability at the moment, that's changing. So without question, it's going to have an effect. There's no way that the rise of wage growth is going to be in line with the inflationary pressures of the cost of living. Thus, affordability levels will be reduced, which will make it more challenging, more difficult to get a mortgage for purchasing or even change the conditions in terms of refinance.
Yeah, obviously the last major review you had was the mortgage market review back in 2014, I think it was, Rob, which sort of slowed up the market at that particular point. There was new sort of affordability criteria which were brought in. Last week, the Bank of England forecast that the rate of inflation is due to reach around 8% in spring, currently at 6.2%, and it could go sort of even higher than these sort of forecast 8% towards quarter 4 this year. Is that going to have an impact on prices, Rob, in terms of what we said here, people's their sort of household budgets are going to be impacted by rising costs, rising inflation? Is that going to have further impact on the residential market at all, do you think?
I think historically, institutional experienced investors have always gone into real estate, commercial and residential, in inflationary markets. The historical context of that is different to the current market conditions today on the back of QE and COVID, so huge volumes of savings, and now inflation on the back of that, of the experience that we're seeing. So whether ploughing into commercial and residential real estate in inflationary conditions is the answer compared to the historical context of that is the key question mark at the moment, and watch this space. Let's see what the market does.
Yeah, thanks, Rob. And hopefully the sort of the low stock levels, they continue to rise throughout the year. Obviously now in terms of the office market here in London and across the UK, workers are now starting to return to the office in high numbers, and obviously some companies operating more of a hybrid working model. That's boosted the UK economy in the last quarter, and also assisted some of the high streets in terms of the multiplier effects of that. Rob, I know you've been travelling recently in the Eurozone where workers haven't been returning to the office in sort of quite as many numbers there. Some fears about sort of COVID, further variants, and also sort of lower vaccination rates in some of the European countries. Does that align with what you've seen so far on your travels? I know you've been to some EVA meetings
Yeah, I think one of the trends we're seeing that I'm noticing at a very early stage is that the hybrid working, especially for the office market, is creating a possible two-tier scenario where prime and centrally located offices are performing well because they're the locations where people want to be, and so hybrid conditions work well around that. I think it's the secondary locations and the secondary office market where people might say, actually, I don't need that space anymore. I'm going to work for a home, and the companies don't need those locations. I think what we're seeing is possibly a two-tier market strengthening, the gap increasing, and I think that's a trend to watch both in Europe and here closer to home in the UK. That's the early trends. Let's see how that plays out again in 2022.
Yeah, well, good that you made it back with some of the sort of flight cancellation we've seen in some of the sort of London airports, and obviously Manchester was badly affected earlier this week, wasn't it, in terms of flight cancellations, just as people are going away for Easter.
Yeah, very happy to make it back. Brilliant. Anything else, James?
That's it from me.
Thank you, everyone. I've had lots of great meetings, as you will all be aware, both in the city and travelling through Europe, and some great university stuff going on. So great to be back on the road there as well. So much happening. Just brilliant to have a more normal business, working life again, engaging with all of you, the audience, and both online and more importantly in physical presence, physical meetings. Just love that. It's everything that we work for, and so happy to have that opportunity with all of you once again. So thanks for that. Thanks for the support through all the socials, the online podcast, YouTube, and all the other engagement. Keep engaging, keep asking questions, keep supporting, and as always, we're here to help you. So thank you very much. Thanks, James.
Thanks, Rob. Thanks very much, everyone.